The big banks are rolling out earnings this week. Let's bring in Michelle Schneider of the Market Gauge Group. And Michelle, what's your prediction?
Well, it seems that we might see, I think the anticipation is that we're going to see not so great earnings for the banks. And that kind of makes sense because so much of their profit comes from the things that have been hit. Investment side, been hit with lots of liquidation. The borrowing for housing side, been hit with higher interest rates. And the savings rate's been hit with people taking money from savings and adding to credit card debt. So I don't think anybody would be, I think the surprise would be if they weren't as bad as they thought. So that's been discounted. CPI coming out this week. Also, expectations are for a 9% on a year to year. And yet there's been a lot of indications that maybe many aspects of the whole inflation narrative have peaked. And I would say that's probably true. The biggest one, of course, being oil, which seems to be now trying to find a range between, say, $90 and $110 a barrel. So if you put that all together with the strong report we had from the jobs last week, or at least the perceived strong report, of course we know labor participation wasn't necessarily all that strong. What it looks like right now is that barring any crazy more geopolitics, which the world seemed to explode this past weekend, we may find some level of footing at least for the summer in the market. Now, does that mean huge rally? No, but it could at least mean that we won't fall out of bed and we'll work our way sideways with certain instruments outperforming along the way and certain instruments underperforming.
I happen to think the market reached some sort of bottom back on June 17th. So what would be your trade here?
Well, I think it's a tough week to say definitively, let's do this, because we do have so much uncertainty out there. But as the week progresses, if we do, and I hope you're right, Angie, find that footing and we have reached at least some tradable bottom, then there will be a lot of opportunity out there. We had invested in ARK last week, actually. And so right now, as long as ARK holds around $40, particularly if that can get back over $47, then that might be a nice little bounce up to, say, $55, $60. That's how you have to look at this market, is once you get an extreme move up, you expect a mean reversion to the downside, you take profit. And once you get an extreme move lower, would expect a mean reversion to the downside and you can start buying. That's kind of how we're doing things these days.
Always appreciate having you here. Thank you, Michelle.